Hey, what's going on, family? It's Brennan checking in with the digital dividends, and I'm so excited, guys. This is my first YouTube. I've been asked over and over and over to just drop some tips, drop some nuggets of all the things that I've learned over the last few months, years, just encountering different articles, different resources, Instagram pages, Twitter pages, and just kind of collecting everything that I've learned that have been of good use. So I'm just going to share some of these things with you guys so that you guys can learn, grow, implement, and most importantly, my mission for this entire channel is so that myself and you guys, if you want to, can come along with me on this journey and earn passive income, investing inside some of your favorite stocks and crypto projects long term. That's the key. We're going to rock it out. Let's go. Really quick, before I dive deep into all the great information, I do have a legal disclosure. I am not a financial advisor. So again, if you guys need help, go seek a financial advisor. This video is for entertainment purposes only. So check it out. What I'm talking about is what are dividends and why do they matter to me? So I'm going to break it down as much as possible. I'm going to tell you guys about the actual definitions that I found online and kind of break it down in my terms, right? So it says a dividend is the distribution of some of a company's earnings to a class of its shareholders as determined by the company's board of directors. Common shareholders, which is you and I, of a dividend paying company like Home Depot or Pepsi are typically eligible as they own the stock before the ex-dividend date. So as long as you and I own a share of stock of Pepsi, Home Depot, Walmart, McDonald's before the ex-dividend date, we qualify for a dividend or a piece of the pie, which is the company's profits, which is called a dividend yield. That percentage they'll pay you from the actual overall price. So let's say the price of the stock is $50 and the dividend yield is like 3%. You do the math with that, they'll pay you a portion out of their actual dividend. My mission is to build passive income with some of your favorite companies and crypto projects long term. All right, so that could be Walmart, Costco, that could be Procter and Gamble, right? Those are stocks. And there's some crypto projects that you can actually purchase as well on certain platforms for right now. If your money's on that platform, you can just sit it there and it will earn interest in regards to you sitting your crypto there. So you can earn it in Ethereum and Bitcoin and Litecoin and many other cryptocurrencies on a couple platforms that are out there. And what is passive income? Passive income is earnings derived from a rental company, a limited partnership, or other enterprise in which a person is not actively involved. So basically passive income is you making money weekly, daily, monthly, biannual, quarterly, without you having to do any like physical work to actually earn a dollar. The company is actually paying you a portion of that. What is a dividend? All right, so a dividend is the distribution of a company's earnings to a class of its shareholders as determined by the company's board of directors. Common shareholders of a dividend paying company are typically eligible as long as they own the stock before the ex-dividend date. And what is a shareholder? A shareholder is any person, company, or institution that owns shares in a company's stock. There are 4 things to know about dividends: their declaration date, the ex-dividend date, their record date, and also the payable date. So there are things that you need to know about your dividends, okay? Number 1 is declaration date. This is the date that a company announces it is paying a dividend. Hey, we're paying a dividend. A declaration statement is issued, which includes details such as the size of the dividend, the record date, and also the payment date. Number 2, ex-dividend date. To receive the upcoming dividend, shareholders must have bought the stock before the ex-dividend date. So let's say right now it's February 26th. If Pepsi says that you have to own their shares before March 1st, you have to own shares. You have to purchase the shares, and it has to clear in your account before March 1st. So if you own, let's say 5 shares of Pepsi by March 1st, they will then say that, okay, Jack has 5 shares and we're going to pay him X amount of dollars based on the dividend yield and how many shares he has based on the actual price of the stock. Number 3, record date. When a company declares a dividend, it sets a record date when you must be on the company's books as a shareholder to receive the dividend. Again, when a company declares a dividend, it sets a record date when you must be on the company's books as a shareholder to receive the dividend. In other words, just buy the stock that you want to have, hold it long term. Therefore, you will be on the actual company's books by the record date. Simple as that. Now, the payable date. This is the date that you're going to get paid. right? The payable date refers to the date that any declared stock dividends are due to be paid out to you and I of record as of the X date. Investors who purchase their stock before the X dividend date are eligible to receive dividends on the payable date. So as long as you own their stock by or before, right, the X dividend date, then you and I are eligible to receive payment by the payable date. So let's say their payable date was April 1st, right? Pepsi say, okay, we're going to pay out all of our dividends to our shareholders by April 1st. But you and I must own the shares in our accounts by March 1st. That's the X dividend date. So that's how it works. Why dividend investing? I like the idea of less volatile stocks that can pay me quarterly or even monthly for investing in their company. Number two, building a base over time is key. Therefore, having the knowledge of how to read a stock chart, I like adding to my positions and that I see opportunities with. It's called technical analysis. So when I say building a base when it comes to a certain company, building a base in a company simply means when the stock is kind of ranging, let's say a stock price is $50, it'll range like $50, $52, 55, 60, drop to 49, 50. It'll stay around a certain area and you're constantly buying and buying and buying. Your dollar cost averaging, which means you're buying weekly, daily, monthly in that same stock. You're building a position over time. You're building a base. So when and hopefully if the stock goes up, you have built a lot of position. You bought a lot of stock and share around a certain price. That's called building a base. And you want to build bases at good places on the chart, right? And I think knowing technicals will pretty much show you where to buy, but understanding fundamentals will tell you why to buy. And that's looking at their balance sheet, their cash flow, what they're doing, the board of directors, the CEO, the management team, how they're running the company, and where do you see the future of the company is going. So I think that's so important. And thirdly, it's additional income for me. Say it again, it's an additional income for me. You have to understand if this is your method of investing, then you choose this route and you stick to it long term. Unless you dump it in 10, 20, $40,000 a week, then hooray for you. But for us who's putting in $20 a week, $100 a week, $200 a week, we have to build our base over time, build and purchase stable, legit, quality companies who are powerful in their top 2, top 3 in their sector. You won't have too much to worry about in regards to who you're investing into. So it's for me, again, it's additional income and retirement income in the long term. Also, I can pass down these assets to my kids in the future, striving my way to generational wealth. And again, this is my mission right here, to build passive income with some of your favorite companies and crypto projects long term. That's it. All right. This is definitely my first YouTube video, giving you guys all the information that I've come across and what can help you. Now, what I'm going to do here is going to show you guys next how you can kind of find stocks, like how you can find out what their dividend, how you calculate it. Let's dive into that right now. I'm going to dive into Google and show you guys a few things on how you can find stocks and so forth and so on in regards to their dividend and what kind of stocks pay it. All right, so really quick, go right to Google and all you have to do is just type let's say PG. A lot of times when it comes to stocks, you put a $sign and then the actual ticker symbol. So Procter & Gamble ticker symbol is $PG, and you just put stock, right? And you'll see Procter & Gamble, you'll see their price, how much they cost per share, right? And then they're up 4% today. The day you see past 5 days, the past month, 6 months, year to date. That means from the beginning of January to now, the past year, past 5 years, and then all time. Look at that chart, all time, right? Now you just scroll down here and you'll see the open, the high, the low, market cap, which means how much money they actually have inside their entire company. And the dividend yield. So this is how you'll be able to determine how much the company pays. So one way that you can do some math to learn how much they actually pay for a dividend is you take 158.24 and you just minus 2.20%. And you round this off. All right. So they pay $3.48 per share you own. So if you bought one share, it'll cost you $158.24. So every share you own, they'll pay you $3.48 per share per year. Now, most companies, they pay you quarterly, which is every 3 months. So what you'll do to determine how much you're getting paid per quarter or every 3 months, you'll just do 3.48 divided divided by 4. So every quarter, you should look to get paid 87 cents per share times the amount of shares that you guys own total. So that's very simple. Now, if you want to know another website that you can go to where you can find out really quickly, just go to marketwatch.com. You go right up here to the top, search the symbol, type in PG, and you'll click Procter & Gamble right here, New York Stock Exchange, NYSE. And you scroll down just a little, it's going to tell you a lot more information, overview, profile, the charts, the financial, which is very important. So remember earlier in the video, I was teaching you guys about fundamentals and technical. So you have technical analysis, which is learning the charts and which is how it looks, which is it says charts. And then fundamentals is their financials, right? So that's a whole nother story. But right now we're going to scroll down and you're going to see all the information that you need to know. And right here, it tells you how much money they pay per quarter for their dividend and what their yield is. So this website is an at-a-glance website you can go to, type in the stock, and check it out. Let's look up one or two more. Let's try Home Depot, right? Everyone's familiar with Home Depot. Their symbol is HD. You scroll down a little bit. They cost $316 per share. And you scroll down, they pay 2.40% for their dividend yield. So they pay $1.90 per share you own. Another one, let's look up Starbucks. It's $92.58. You scroll down a little bit more and they pay 2.12% of their overall price by the ex-dividend date of how many shares you own, and you get paid 49 cents per quarter. So this really breaks it down. They have a lot of articles here. They got their financials where you get to see the income statement, how much money Starbucks made every single year for 2017, 2018, their sales growth, balance sheet, right? You get to see all their information, the cash flow. Every company that's public have to report their earnings, right? So that's what you may call our earnings state. That's why it's so important for you to be very engaged with the company that you're investing with. So this is just some information that's very general. And the last actual website that I want to tell you guys about is Tip Ranks. Very quick, all you got to do is type in the actual symbol to kind of generate to see how much money you could make or have passively, potentially, in regards to investing in your favorite dividend stocks over the long haul. So here we go. You go to Research Tools, click on Dividend Calculator, and you just search anyone, let's say Verizon. Verizon is a very solid dividend stock. The top two in their industry between Verizon and AT&T in the telecommunications sector. And you click on Verizon. And Verizon right now, it'll change it automatically. It costs $54.12. And let's say you want to put $1,000 into Verizon. So right now at this price, you'll receive 18.48 shares and you'll get paid or distribute your dividend quarterly. And let's just put this down to just 1 year, calculate my returns. So in 1 year, if you buy $1,000 worth of Verizon right now, you'll get paid $47.40 of annual dividend income. And again, if you do 47.40 divided by 4, which is 4 payments, you'll get $11.85 coming to you every single quarter. Depending on how the price rises or falls, you'll get paid that out, right? And that money could be reinvested, which is called DRIP, okay? Which I would highly recommend. If you're investing for the long haul, you should invest in DRIP. So what is DRIP? I just Google what is DRIP, right? So I click on Investopedia, which is a very good website for you to understand different terms in the financial world. A DRIP is a dividend and reinvestment plan whereby cash dividends are reinvested to purchase more stock in the company. DRIP uses a technique called dollar cost averaging, intended to average out the price at which you buy stock as it moves up or down. So every single week as you're putting in $20, $5, $100, even as the company pays you your dividend, $11, $20, $100 every 3 months, you use that same money that they're paying you and you're reinvesting it. So therefore it compounds over the long term. Lastly, DRIP helps investors accumulate additional shares at a lower cost since there are no commissions or broker fees. This is just some tips I wanted to share with you guys in regards to investing in dividends and why I believe in it and why I'm building one of my portfolios specifically around dividends, which kind of detaches itself away from the market. So it's not as aggressive or volatile as Apple or Microsoft in growing the company, but they kind of have that long-term stability because a lot of people who work jobs, they have these companies in their retirement plans, and hedge funders have these companies inside of their management funds, and they hold them for a very, very, very long time. And that is it, guys. I'm so excited about everything I went over today. And trust me, when I tell you, if you guys will start implementing a few of these things, you could learn a lot. So dive in, go to Market Watch, create you a free account, add some of your favorite stocks to the watch list. If you want to learn about that, just comment below, let me know. Create a free account with Yahoo Finance, add all your favorite stocks to Yahoo Finance so you guys can kind of keep up with all the companies that are paying dividends, and as they grow, everyone is happy, right? Last thing I would say is in the bio section below, I will leave my links so that if you guys want to sign up with the brokers that I use, they also give you guys money for signing up for the actual broker when you deposit your money into the account and you buy stock. So you pretty much make, some of your money back in regards to signing up to these brokers. In the future, I will be going over videos of how to make passive income in regards to crypto projects and everything like that. So I'm just excited to be starting this entire journey. And lastly, again, if you haven't subscribed yet, subscribe, click that button, turn on the post notifications so that anytime I post this information, you will have access to it. So again, if you guys have any concerns, any questions, any thoughts, leave them below. I will respond to every single person that I could possibly respond to. Be nice, be kind. God is love. I love you guys. I appreciate you. This is Brennan checking out with Digital Dividends. Woo.